All right, everyone. Welcome to the second panel discussion of LEAPxFinance. I'm going to provide maybe a couple of minutes while people are entering the room. As you can see, we've got a star-studded panel and moderator here. So I'm just going to quickly introduce the session itself and then hand over to Michelle, who's going to be moderating this session along with James and Anmol, who'll be the panelists. So in this session, building upon everything that we have sort of kicked off right from the beginning of today, talking a bit about open banking, FTX, open finance, building on a case study from Tab Bank. Now we expand that journey into the world of API monetization, which is going to be looking at the new economics of APIs and payment systems. To take us through that journey, it's going to be Michelle, who's going to be our moderator and facilitator for this session, you probably have seen her in the opening panel discussion, and bringing all their expertise to the table will be James and Anmol. I'm going to hand it over to Michelle to take us home for the next 30 minutes. Over to you, Michelle.
Thank you so much, Buddha. It was such a pleasure to be part of the opening panel this morning and have so many attendees listen to us as we talk about open banking, open finance, and even open data. I'm excited to be moderating this session focused on APIs. APIs have largely been the back end of the ecosystem, and they've largely become more of a hot topic and more of a revenue driver as people start looking into what APIs can enable. And therefore, I'm excited to be the moderator for the session and have James Neville, who's the CEO of Yaspa, as well as Anmol Grover, who is the head of global practice at Wipro. So I'd love for each of you to kick us off and just share a little bit about yourselves, your role, and the state of API monetization in the financial services today. And I'll start with you, James.
Hi, so I'm James Neville. I'm the CEO of Yaspa. We're an instant payments and identity verification business based in London, UK. We're also growing in the US. We were one of the first businesses in the UK to get a license for open banking, so kind of PSD2 licensing for both AIS and PIS. Both those combined. AIS is account information, PI is payment initiation, and we've been doing that since 2019 to kind of great success. And it's kind of interesting seeing the kind of rise of open banking and all the changes recently in the US. So really happy and excited to be part of this debate here with my joint panelists.
Thank you so much for being here, James. Anmol, over to you.
Thanks, Michelle. So I've been in the industry for nearly 20 years. I've been associated with open banking ever since its inception, right from setting its standards, and that association has continued across the globe, setting up, for example, contributing to open finance in the UAE to all the way to consumer data rights in Australia, and later in the US also. So I think, apart from that, I also drive API management and integration practice at Wipro. I have seen the emergence of open banking, and now I'm seeing the inception of AI and how it's potentially impacting API like lifecycle management and perhaps monetization as well. Extremely glad to be here.
Amazing. Thank you for being here. As I look at this shift from plumbing to potential profit centers, and we're looking at AI really pushing the line of what APIs can facilitate, what do you think is, other than AI, driving the shift of making APIs a revenue opportunity? And maybe I'll start with you, Anmol.
I think if you look at APIs, when we started, APIs are nothing new. They've been there for quite some time. I think we've started looking at APIs differently, which is we've started looking at them as products and as revenue generating opportunities. Now, what has that actually impacted for organizations or businesses? The latest study I saw, revealed about 25% or more revenue getting generated by APIs. And this was a survey by Postman, so pretty recent. And I think another thing I'm also looking at is the rise of generative AI and the kind of opportunities that they are creating. They are quite bright, unlike the weather today in the UK. So really,
I agree with that.
Really, really exciting, and looking forward to seeing how API monetization can further drive economic value.
Yes, definitely better than the weather. APIs can keep you excited about the future. Appreciate you're both in London and it's probably cold and gray, but give us some insights, James, when you see APIs, obviously AI, but also open finance. Like, how do you see the revenue generation coming from APIs?
I mean, look, we're right slap bang in the center of all this, and we've seen a big transition in the UK and in Europe post PSD2 and kind of the open banking rollout in the UK from a kind of regulator enforcing this or pushing this on the banks with no kind of commercial outcome for them to partnerships that kind of come from it. When open banking first started in the UK under kind of the OBIE, I was pretty much trying to work with Barclays on a different kind of product where they would give us data and we would kind of validate it. And when they were building the endpoints initially for account information, they were I guess kind of semi-passive aggressive about it. They didn't see an upside to it. They were worried principally about giving external unfettered access to third-party providers, TPPs, to their systems and the whole security nightmare that it opened up for them. And you got to remember, it's 2016, 17 is relatively early days of kind of externally facing API endpoints being presented by banks. And as we kind of went a couple of years on, they kind of sucked it up and swallowed it, and they would then start reaching out, post kind of Jess's world. They come out and they talk on fintech forums. They try to encourage partnerships there, and hoping, I guess, something would come of that of positivity. And of course, just before we went into coronavirus lockdowns and the like, there was a large roadmap of things that the banks were going to do in collaboration with the external ecosystem. And it went, everywhere from kind of premium data to kind of risk and fraud services. And unfortunately, some of that has come off and not all of it has, but we're starting to see a similar type of, I guess, a similar timeline in the US happening, although the US isn't being driven by, the regulator and, government, competition authorities forcing this on the banks. It's come from, banks wanting to make money, and the commerciality of the US. I always talk about this, that the US will always find a way if it makes money. So, the opportunity naturally presents itself. You've got a model that clearly is working and driving innovation in the UK. You've got the ecosystem has developed very, very quickly. Fintech is, still principally, led by kind of London, certainly from an investment perspective. The model in the US when this all blows up is going to be much, much, much bigger. And the banks see that. So I know you want to talk a bit about kind of JPM later, but, the commerciality of the US is what's driven API adoption and will continue to do that, irrespective of how a regulator wants to put a framework around it. I think you've got unbounded kind of open finance happening in the US, and that will continue irrespective.
Yeah, I appreciate that you touched on 1033. Without regulation, there's still 100 million users in the US. So open finance, open banking is still growing. But many organizations have made this a plan from an API marketplace perspective, and some of them are still trying to experiment where do APIs fit into a potential monetization play. What do you see maturity of API monetization strategies look like, and what are the key steps to get there? Maybe I'll start with you, James.
I think there's a number of factors we can witter on about kind of normalization and standards, all we like, and there's a number of bodies that even Wipro is kind of part of that, as a lot of other folks are across Europe. That gives you a starting point. The last thing you want from a maturity perspective, if you're a small bank in downtown Ohio trying to figure out what this stuff should look like and feel like, you need a model to work from. So regulatory standards will definitely drive you there. Like price points, we've got strong ecosystem established. In the US, you've got the people effectively the aggregators, the brokers, everyone from MasterCard's Finicity through to Acquire and MX, they all have a charging model around this. So, if you want to have a share of that revenue or you want to charge for it, clearly it's pretty well kind of etched out in the ecosystem already. I do still think that there's stuff that the banks haven't been doing that they were about to do in the UK, and that's maybe a commercial maturity rather than a kind of API maturity. Like for me, I've always said KYC should be done from the triangle of banks, insurers, and telcos. If you get name, address, and date of birth from a bank, and then you can match that against other sources, you've got the best KYC check in the world. So banks have been resistant to give out date of birth on their endpoints for obvious reasons, because someone else is going to monetize that, as the other people have off the back of open finance. But I think where you're going to get real maturity in the ecosystem is where everyone's working together and people share, all of the data that's available on the commercial agreement. So I don't think we quite even got there yet in the UK. We're definitely a little bit further forward than the US, but I think the commerciality of the US will push that quicker than the UK in the short to medium term.
Yeah, I love that you touched on KYC. We could have a whole other discussion
Oh, we
on
could,
ID
yeah.
validation, infrastructures, and how that could help the ecosystem. But Anmol, I wanted to come to you to ask that same question, but also ask, where do you think they get stuck in their journey as they try and figure out monetization?
I think if you look at look at history, look at what has happened in the UK, I think initially the monetization was not as successful, and some of the challenges we saw was, we were trying to do use cases or trying to drag our feet, out of compliance into monetization, but it was always a struggle because we could not identify the right use cases. I think that was the starting point where what kind of use cases would generate revenue. I think that was one of the first. What is your strategy? Second was, once you've identified the use cases, the ability to accelerate and fail fast, do quick POCs, be able to establish what works, what doesn't work, because you have an ecosystem that was already established on the back of the regulation. You look at Australia, it had consumer data, right? So you had a mechanism to share broader data, which opened up far more opportunities. And while it was stuck in the UK, the same data bill, with open banking itself, identifying the right use case. Number two, being able to do quick POCs, fail fast, have the right level of governance built in, have the right pricing models, have the ecosystem maturity that drives it forward, and be able to also build that trust with the end customer to be able to leverage that service by showcasing the value. When the pin and chips came up, I can't remember, James, you might remember, this was the Barclays ad, right, where they would hold this placard and say, "I love pin."
Yeah.
And that was a long time back, but I think that's how you got people hooked on. And I think that's where a lot of conversations are getting stuck. We are on the right trajectory, so don't get me wrong. I'm not implying that monetization is not happening. It is happening, I think, but the pace is still not as what was expected initially.
And I think I'll
Yeah.
just add to that from a kind of technical maturity perspective. The early part of the open banking journeys in Europe really demonstrate that the banks didn't understand continuous integration. They didn't understand how to kind of run, automated end-to-end testing their environments. There was massive discrepancies between sandboxes and production. You would test against a sandbox, you send it live, and the response that came back was completely different from the documented response. You'd push something out in some request headers, and you would get you would get a 400 or a 500 or whatever the hell came back, and you realize that they kind of changed the formatting of all these things. So banks learn in very short order how to become more like a tech firm in the last kind of 5 to 10 years. And maybe they're not perfect to continuous deployment, maybe they're not Kubernetes and everything else, but they are definitely taking a whole headwind from Silicon Valley.
Yeah, that really leads me into my next question. First, I love that you said fail forward fast, Anmol, and I think people have to have the willingness to fail forward because that's the only way we truly learn. But there is some leaders in the ecosystem, like James said, Stripe, Plaid, Adyen have all built really thriving developer ecosystems of APIs. What do you think could be learned from those systems back to the banks and the credit unions? In that style of trying to create this ecosystem? And I'll start with you, Anmol.
I think, look, if you look at some of the fintechs, they've done a fantastic job. Some of them, and a lot of them, have been acquired as well on the back of it. Like Think, for example. I think if you look at the pace at which they've operated, and I think it's not that simple for large organizations or large banks that have been in existence for decades, centuries. To actually and being a part of a large organization, making the movement from the bureaucratic ways to a very nimble way of operating and working is extremely difficult. I've run my own company as well, and it's far more easier to be able to take decisions with a smaller set of people than to go through large committees. I think that probably has been something that has created issues. I think within the large organization, when I had to build something, I was granted a separate access, a separate way of working, which allowed me to build certain solutions which I could take to the market. So I think this whole process of enablement and the legacy that we carry, mind you, these systems, they were mainframes and now moving to a very different architectural pattern. Looking at APIs, which was earlier REST, now we are looking at some of the other aspects, gRPC, GraphQL, so many other things coming up as we are progressing. And then with the interventions of AI, I think that transition, that migration is accelerating. So the process, and I think there's a lot that they've picked up in terms of how to be nimble, how to perhaps carve this out as a separate business unit that allows you to accelerate the whole process. Also, how do you find ways, by answering certain questions, like a large bank in the US, one of the issues was fintechs coming in asking for data, and this was slightly early days, and their operations team getting overwhelmed by providing them the data to come and actually test in their sandboxes. So I think these kind of challenges, which were actually at the foundation level, have probably been addressed. I think banks do realize the pace at which they need to operate and run. I think there are, with the advent of AI, I do see a lot of processes being further streamlined, the ability to accelerate, the ability to be able to do POCs faster. And I think the challenges would still remain. Michelle, I don't want to convey an impression, because I've worked with probably some of the best banks and some of the smaller banks and some of the bigger banks and the smaller banks as well, and some of the most innovative banks. And I've realized that, the cultures are also slightly different, and it requires a lot of effort to change all that. And that's what perhaps they are trying to do when they are hiring people from a lot of these fintechs into the banks and trying to get that culture in.
Yeah, I appreciate that. I feel like KPIs are such a great tool to try and get teams on board. And I wish they would just put API open banking as a KPI of the bank and then make it a mission across the ecosystem. But James, anything to layer in?
Oh, don't start me on kind of KPIs from banks. And look, we shouldn't beat up the banks. It's hard for them. It's hard for anyone that's been an institution for tens of years, if not hundreds of years. Like, I remember when we started building Yaspa, it was a monolith. We deployed it all as one blob of code, and like we would be scared to do that more than a couple of times a week. And then we would we'd do maintenance windows, so we do stuff out of hours. Banks all do the same thing because they've got big chunky systems, but not just one chunky system. They've got another one and another one. They might have replicas of the chunky one as well. So for them to do what we've got to now, which is separating out everything from some of the kind of post-processing to the kind of raw facing external calls, we've got microservices for each. I still probably could do with 10, 20 more microservices, and I could do with grouping them together, and I could deal with each of those external, internal versus third-party provision, having SLAs between them. We're nowhere near that yet, and we're getting on being like, what are we now, like 7 years old? The bank, it's had decades and it's still going to struggle pulling all this stuff apart. It's always difficult as well when you work with third-party vendors. Banks build their stacks on software that's provided to them, and let's not talk about the old mainframes and AIX and everything else. They could never do. We did 3 deployments in one day last week. One was a hotfix, 2 were features, and I would have been scared by that 7 years ago. That would definitely drive a banker to his or her grave, I think, at this moment in time.
Well, I think that that's a really good description, and I do give them credit. It is hard to
They're
change a
trying.
ship.
They are trying.
Yeah, they are trying. Well, it brings me to the hot topic. in July, we were trying to take a minute of vacation, but instead JP Morgan decided to make some big announcements on their, potential charging for their API access. And it definitely put an uproar through the third-party ecosystem and the whole ecosystem. But I'd love to get your take on what that move was. Was it risky? Was it inevitable? And how do you think it's shaping the ecosystem today with them now having a signed partnership with Plaid? And I'll come to you, James, first, because we've definitely talked about this on different stages since July.
Yeah, we have, and everything I say here is of my own personal opinion and does not represent Yaspa's opinion. I'll just put that one out there as a legal context. But look, it's a bit of it's a repetition of what happened in the UK, and maybe it's more of the US commerciality that comes out in the UK, when it started the open banking journey, was forced to do this upfront costs, etc., etc. The US has done that in collaboration with a number of aggregators, but it's the aggregators that take the lion's share of the money. Now, they all have partnerships with the banks. They all pay the banks a certain amount of money for access, but as sectors grow, banks start going, well, actually, it's our customers' data, and we want more money from this. Well, actually, hello, it's nobody's data, it's the customer's data. It's not yours and it's not the aggregators. So this is literally a distribution question, and how much the bank wants for the privilege of operating systems that an aggregator or somebody else in a more open context can come through their front door, go through cybersecurity, take that data and leave. There is a cost to that. Now, if the banks feel like they're disenfranchised by only getting 1 cent or 2 cents on transaction, then sure, they should be fighting for that. But I think it's more of a bravado move by JPM at this point, and trying to set out their stall that the banks deserve more money for what part they're playing in the ecosystem. So again, I think it will all harmonize over time. I think it will lead to a bit of a shakedown and consolidation in the aggregation space. It's going to be about revenue share between partners, and whoever operates the best revenue share then and brings the most volume to a bank is probably going to get exclusivity, or and the others being kind of frozen out over time. I think time will tell, but the reaction wasn't that every other bank stood up and went, we want to do the same and we want to over commercialize the kind of open finance infrastructure. Quite the opposite, in fact. So I think it's shots fired, but I don't think it's war at this point.
Great summary. Anmol, do you want to add to that?
I think the honest answer is we don't know where this is going to head. I think the fundamental issue which we thought was addressed was, this is the customer data, and banks are the custodians. I think that Pandora box has been reopened in some ways. You can argue both ways. You can, as a bank, you can argue, I'm putting in so much money to build systems that secure that data and so on and so forth. On the other hand, you're a fintech, you can argue it the other way. It's kind of not helping with innovation and so many other things. I think the truth would probably sit somewhere in the middle. For example, you could charge for, you may not charge for some basic information, but perhaps for, let's say, high performance APIs or some value added services, you could perhaps charge a fee, or you could agree to distribute some of the revenue that gets generated. I don't know where the model would eventually sit. And the regulatory chaos has also created, this situation where, we are finding ourselves in. So I don't know the answer. I think it'll probably sit somewhere in the middle is what I can guess, just to add to what James said.
Yeah, I think
Yeah.
just adding to that, on terms of models, the UK and a number of banks that we've been working with, particularly RBS, who kind of became the bank of APIs, was their kind of commercial play. One of the key models in Europe has been premium data, so name, address, date of birth, anything else that can be validated. So email address, mobile phone number. Take name being the stuff you get for free. Everything else is what you commercialize. And I think that's the most obvious kind of onboarding commercial model that we'll take from that, and that's generally the conversation that we have on a very regular basis with all the banks.
It makes a lot of sense. Like, I come from telco, so having number portability, it's
Yeah.
my number, right? Like, I don't believe that they have a monetization play on that portability push. But I appreciate we're running out of time. I wanted to get one last question in for each of you quickly. Can you share what you think in 2028, so 3 years from now, what do you think are going to be the dominating API monetization models? Maybe Anmol first.
Sure. Michelle, look, one thing is for sure. I think the open finance should come into play, and that would allow banks to look at banking, not only the banking data, but more also towards the financial data. Opens up new models, new avenues. I think that is one side of it where the value of open banking would be enhanced and multiplied, and you'd be able to offer far more value-added services. With the advent of AI, I think the other thing you would see is a lot more optimization in the services that get delivered to the end customers. The ability to navigate and be agile in terms of personalizing services would be greatly enhanced with the pace at which the technology has evolved. If you look at, I think yesterday or today there was a report in FT in terms of the adoption, and the adoption rate of AI was far more quicker in terms of reaching I think million users. It was about 2 years or 3 years, something like that. And I don't want to be quoted for this, but for internet it took somewhere like 12, 13 years. So I think that's going to change. And just to conclude on that point, I know we're short on time. So, you mentioned about telco. The ecosystem play would start becoming more prevalent as we speak. I'm working with a telco and with a facilities management company to figure out ways in which we could monetize APIs, and the telco has full feature teams focusing on services that they offer to banks. So this disruption of the business model from a very linear model to an ecosystem driven model would actually be enhanced as open finance and subsequently open data comes into play. That's what I'm hopeful for by 2028.
Oh, I so agree. James.
I know we're short of time, so just echoing those commercial parodies, I think, putting the customer at the center of the equation and powering sharing of their data with consent, I think brings all of the kind of onboarding KYC use cases. I think once you've got that, you've got a kind of key pillar in the ecosystem, and then you need to share that around. So agentic AI comes into this. How does someone's personal agent talk to its bank or talk to their customer's bank to get intelligence from that bank, passport it somewhere else? I think that's probably another tier that we'll see. We talk to banks and kind of everyone in the finance sector about providing us data for training sets or otherwise. I think the banks have a key part to play in financial health and determining what financial health really looks like. And they had a massive missed opportunity that ended up being the Equifaxes and the Experian built credit reference checks on top of stuff that the banks really should have been doing in near real time. And they still haven't done that yet. They're relying on businesses like us to build on top. But models require data, require training. And I think more partnerships with the businesses that are building agentic AI or financial health AI will be a strong direction of travel for the next few years.
I so appreciate that. You guys have been an incredible panel. The future of finance looks bright, but APIs have become even more crucial as we go to enable it. Thank you for being here. I think there might be some questions from Buddha.
Yes, so we do have. Thank you so much, by the way, panelists. That was amazing. I was listening on the backstage, and it was amazing. One question, I think that's all the time we have. A very pertinent question from Noah, asking, do you see a future for API monetization in smaller scale organizations? Like James, you were saying the small bank in Ohio, does that have a path to additional revenue via this method, or should smaller organizations focus on protecting themselves from the API vendors that they utilize?
No, I think there's always an opportunity in being open, but it's the cost of becoming open. And what happened in Europe was a handful of businesses have provided services to make banks compliant with the regulations, right? So they charged them X amount of money and then they took money the other way. I think that was a lopsided model. I think the better model is that people that want to broke that data, and it is a broking service, integrate with the smaller banks, and then they have a revenue share upon all outcomes that come from that. Because if you're commercializing someone's KYC information or transactional information, there are smaller banks where one individual will only have that bank account. That is the source of truth for them. It's not they can go to everyone else. the person needs to, the individual needs to be verified by that bank. So I think just being a little bit more commercial and not paying for the privilege of joining the ecosystem and just and basically defining a better revenue share model is really where I think this needs to go. And that's just learnings from the UK and Europe for me.
Great. Anmol, any sort of 60-second thoughts on that?
Oh,
Agree, disagree on that bit?
I absolutely agree. I think what James has said, I think it's always about the use case. I think the most difficult problems we end up when we don't pick up the right use case, the right problem to solve, understanding what you're trying to achieve. And if you start with the right use case for API monetization, I think smaller institutions have a better chance of succeeding because they don't have the challenges that legacy banks have, so they can accelerate the whole proposition a lot more faster, are far more agile to be able to benefit. So I would argue it's the other way around. They are probably better positioned to benefit from it rather than traditional banks, and should make full use of it.
Fantastic. Thank you so much. Appreciate all of those insights. I'm pretty certain the attendees are leaving the session completely happy and excited about how to take the next step in their journey.